Hey, this is Ken Finnan at Capital Advantage Tutoring, and it's my job to get you past the Series 7. So I'm going to do another exam today. I've been having a lot of requests to do this. Everyone's saying I should do more. I'm going to do other exams, but today I'm doing an achievable Series 7 final. So again, achievable. And the way it works is, like I've been doing for the last 2.5 years, when I started doing these, when the question comes up, hit pause, read it, answer it your way, write it down, whatever, then listen to how I answer it. And if I get it wrong, because remember, I'm seeing these brand new, I can get them wrong. You're going to hear my frustrations. You're going to hear my cursing, me getting mad, getting them wrong, misreading them, all that stuff. You're going to get to see how I process exams, okay? And I will get some wrong. It's just the way it is. I hope I will edit it so that hopefully the right answer will go before, like right before I answer or right when I answer. I'll have the right one point. I'll have an arrow, a little video arrow showing you the right answer. So you don't go through the whole exam going, wait, was he wrong or right? So this way you should have, as you go along, the right answer. And then I will go through the ones I got wrong when it's over, just to make fun of myself. Okay, let's get on it. Okay, so let's get into this. Now that the dogs are done barking, everyone here who's here, in North Carolina won the girls' women's lacrosse championship. Who knows who's going to win tomorrow? Let's get into it. Let's see. Hopefully it doesn't take 225 minutes. Well, look at that. The clock's already running and I haven't even started. The pressure. Which of the following terms is associated with equipment trust certificates? Backing of a parent company, money markets, secured, full faith and credit. Okay, so backing of a parent company would be a debenture, but it would be called a guarantee bond. A money market is obviously not that. That's short-term debt under a year. Full faith and credit also means debenture. It means I promise to pay you, so it's got to be secured. Okay. After years of hard work, your client obtains a job with high compensation, big bucks, big jack. They are now considered an accredited investor. They take part in a private placement and purchase a significant amount of shares as a long-term investment. What describes the shares they purchase? Okay, so the treasury shares? No, that's what the company buys back. Are they Class D? No, that's just my grade point average. Are they restricted shares? We'll come back to that. And control? No, control are for like pods, the partners, officers, directors, and insiders. So I'm going to go with restricted shares, which means they usually have to be held for 6 months fully paid. About to sneeze. I sneezed. So there'll be another one coming. I always have two. I'm going to pause again. Well, that was quite the sneezing fit. Okay, so now allergies. The letter of intent may be backdated up to how many days? Okay, so the letter of intent is for, so you can get a lower break point. You promise to put more money at a later date. So we can go out 13 months, but we can always backdate 90 days. So we can backdate 90 days on that. So now the thing is, since it's a max of 13 months, if we backdate it 90 days, then we can only go forward 10. So it's a max life of 13, not 13 plus 90 days back. Also, remember, the whole point of that is that if I have money now, I think I'll have money later, and I want the lower break point. And the reason you might backdate is you may have put money in 2 months ago, and you go, wait a second, I want that to count toward my letter of intent. And you can, up to 90 days. A representative reports finding evidence of an older investor subject to fraud perpetrated by his evil family. What statement is not true? So remember, what is not true? So what is not true? Remember that regarding the capabilities of the firm. Disbursements may be wow, I can't speak. Disbursements may be blocked for a total of 25 business days without a court order. The firm should attempt to reach the investor's trusted contact person and explain the situation. That sounds good. The firm should obtain a court order if a restriction is required to go beyond the 25 business days, and the firm may initially restrict the account for no more than 15 calendar days. So let's talk about this. So we can do what is not true? So we trusted contact person is someone you should reach out to, right? Okay. Interesting. I think I know where they're going with this one. It's a little tricky. And I may be wrong on this, but let me think this through. So you can do 15 days. You can restrict for 15 days and then another 10 days if you need it. Anything more than that, you need a court order. And that's where I think they're going. So I can block for a total of 25. I think that's correct, unless they're saying something else. We should try to get the contact person. I agree with that. And we initially may not restrict it for 15 days, right? So we can do 15. That's true. So I think the reason this is wrong, I think, is because it said should seek to obtain. Okay, that means I could be way wrong, but I think C is going to be the answer here, because you can go 10 then 50. You can go 15 then 10, which is why 25 is true. But anything more than 25, you need a court order. So I think it doesn't mean should. I think it means they have to, and that's where I'm going to go with it. Now remember, you don't have to have a trusted contact person. You just should have one. Okay, so this one's a borderline one. We'll come back to that one. A client of yours learns about NASDAQ's pre and post markets, which allow trading beyond its normal operating hours. True. They're very interested in the opportunity to trade for longer periods of time during the day. What statement regarding NASDAQ's pre and post markets is false? First of all, if you're a retail person, do not trade before and after the market. It's just ridiculous. Before and after the market is kind of a crazy time, right? There's less people in there. So let's go over it. Okay. Lower trading volumes occur. That is absolutely true. Securities are subject to higher levels of liquidity risk. That's true, because you may not be able to get out of something. Additional risk disclosures. I think you do. I think you have to let them know that there's going to be less shit going. There's more risk going on here. Inside market spreads narrow. No, they would definitely not narrow, because remember, an efficient market, active market means you have very narrow spreads. And when they mean spread, they mean the difference between the bid and the ask. So I got to think that top right is the answer. That's false, because you do have to let them know that if they do start trading before and after the market, there's going to be a lot less liquidity. So I'm going to go with top right. All the following are correct orders for liquidation priority except. Okay, so let's start with top right. Junior unsecured creditors. I usually don't lead with that, but preferred and common, that's correct. Top right is good. Okay. Top left, unpaid and secured then common. I like that. And then bottom left, unpaid, unsecured, preferred. Yeah, that's debt, preferred equity. So bottom right, preferred then common. Okay. Then creditors. Creditors always come before equity no matter what. Even if you see the word unsecured, unsubordinated, debt is always before equity, always. So bottom right has to be the incorrect answer. The correct answer, the accept. Which of the following is most likely to earn a markdown? Okay, so agent, broker, commission, ABC. So agent, broker, commission. So the top two are out. And then we have syndicates or market makers. So that's interesting, right? Well, a syndicate would be selling shares to the public. So at worst, if you had anything, they'd be calling it a markup. So it has to be a market maker. Market makers, remember PDM, principal dealer markup, right? And market makers are part of the whole dealer system. So it's going to be market makers. If you're a buyer, they charge a markup. If you're a seller, they charge you a markdown. Assume a market price of 49, which is the following. Let's read it right, Ken. Assuming a market price of 49 bucks, which of the following option strategies is a long strangle? Okay. Long and ABC 45 put and short. No, that wouldn't work. Long, let's knock out the long and short. So the two left ones are going to be some sort of spread. So we have these. Okay. Now, long of 45 put, long of 45 call. Well, that's just a straddle. So long of 45 put and long of 55 call. There you go. So straddles are buy call buy put or sell call sell put, right? If the numbers are different, it's either a strangle or a combo. I don't think on the test they're going to make you differentiate between the two, because in reality, my guys are option traders. They go, "What the fuck's a combo?" I mean, they know what a combo is, but it's not what we think of it is. But FINRA does. So I would think that they're not going to kill you on this, but I would go with if you see a straddle with different strikes or months, it's going to be a strangle or a combo. So where's my mouse? I can't even hit the button. There we go. Top right. When sales proceeds, so when sales proceeds exceed cost basis, what is the tax consequence? Okay. So if we sell something for more than we bought it for, right? Sales proceeds is what we got, cost base is what we paid. We sold it for more than we got. We have a capital gain, right? Because I say, what are the three things that are capital gains? A buy and a sell, option expiration, capital gains or losses, option expiration, and mutual fund distribution. So it's got to be a capital gain. Now, if the proceeds was less than the cost basis, it'd be a capital loss. Boo-hoo. A customer of a broker-dealer with an individual account passes away. If their account is subject to probate, which document is utilized if the customer died intestate? Intestate means without a will. So I would think, now it could be, I'm not a lawyer, so I don't know this shit. I would think letters testamentary. So that's really just all the letters saying where the money is. Watch, it's going to be inheritance tax waiver, but I'm going to go with letters testamentary because letter of intent is for mutual funds. I've never heard of letters of administration. And inheritance tax waiver, that's just the whole with the avoiding the inheritance tax. I got to think that it's going to be letters testamentary, which is just all the basically say all the information on the dead person stuff. Okay. Which of the following risks do strips avoid? Well, I'm not going to touch that one. I always have a joke about that. That's where you're going to go after you pass, but I'll grow up. Okay. Let's see. So we have purchase of our risk. They always, all bonds have inflation risk, which is purchasing power. Interest rate risk, they absolutely have it. Because remember, long and low, baby, long-term, low coupon move the most. And this is the longest and the lowest. So, and remember, the lower the coupon, the deeper the discount, the more the bond will fluctuate, and zeros move the most. So it's got to be reinvestment risk because there's nothing to reinvest, right? Because reinvestment risk is the risk that any money you're getting, you have to reinvest, and you're not getting any money to the end, so you don't have that risk. So it's got to be avoiding reinvestment risk. Cool. GO bonds are typically issued in what form? Participating is not a thing on that. Term is one issue and maturity date. Series is multiple issue dates. And serial is one issue, multiple maturity dates. Most, not all, I should never say all. Most GOs are done in serial form. So that's why you have to quote them yield to maturity or yield to call, because you have to be able to compare the 8-year bond to the 12-year bond to the 15-year bond. And yield to maturity takes in the time, all the time stuff. Okay. So it's got to be serial. Captain Crunch, baby. Okay. A municipality wants to expand a toll road, so it doesn't have the necessary funds to do so. So maybe they shouldn't. What may they issue to improve it, to make improvements now? Bans, GANs, RANs, TANs. Okay, so now I'm always torn on this because it could either be either one, and I think this is too specific, but I'm going to throw out GANs and bans because GANs are for grants, bans are from the federal government, bans are for GO bonds coming in the future. So it's either a TAN or RAN, and I'm going to say it's for RAN. I'm going to go with RANs because you're doing a revenue-based project and you're going to get revenues coming in. I think that's the answer. It could be TANs, it absolutely could be, but I'm going to go with RANs because it's a revenue-producing toll road. Costs money. Which of the following is one of the reasons? Which of the following rules is one of the primary reasons for customers providing their employment status on new account forms? Well, it's not 147 that's intrastate. It's not 144A for that's good. It's either 144 or 145. Now, the only thing I can think of is, okay, 145 is a whole different thing. It's more about restructuring and shit like that. So I'm going to have to say it's 144 to show that you're an accredited investor. It's the only thing I can think of, because it's like I don't even know. I mean, this is a tough one, right? So 145 is for quib, so it couldn't be that. 147 is intrastate. 144 is a holding period for accredited. I gotta think that might be part of it. I can't see 145 being one of the reasons, but you never know. I'm wrong once in a while. A customer of yours owns one long New Zealand $80 put at 5 when the New Zealand dollars trade at 86. Don't care. In terms of US dollars, what is the max loss? Well, if you buy an option, put or call, if you buy it, the most you can lose is your premium. So it's got to be 500. Boom, moving on. Depletion allowances will most likely be associated with the following. So the way I remember this, is that depletion is for God-made shit. Depreciation is for man-made shit. So let's go with this. So depletion is for God-made shit. Well, or dinosaurs, if you want to say, if you can believe that God killed the dinosaurs. So maybe that works. So that's oil and gas thing. Condos, office buildings, and government programs are all man-made. Government programs you wouldn't do this with. But condos and office buildings you would depreciate. So I'm going to go with depletion is for oil and gas programs, because as you sell your oil, it's the greatest write-off ever. You have 100 barrels of oil in a pool. You sell off a barrel. You get to write off, deplete the fact that you get to write off the fact that you don't have another barrel to sell. Pretty awesome. Some good-ass lawyers there. An investor sells short 100 shares of TUV stock at 75 and deposits the margin, which is going to be 50%. The market immediately rises to 90. What is the equity in the account? Well, let's do our math here. So we have to do, I'm going to try to do it really quick and not waste a lot of time. So 7,500 plus 50% plus 3,750, right, is 11,250. Okay, that works. What am I doing? It's a credit minus market, right? So the credit minus market. So our credit is 11,250 minus 9,000 equals 2,250. Is that an answer? Boom. So look, so first we did 7,500 times 1.5 times half if you want 3,750 plus 7,500 plus 3,750 plus 7,500. It's 11,250. The market rose to 990, which is 9,000 to 9,000. And there's our 2,250. That is our equity in the account. Boom. And if you want to get SMA, we would do this minus 4,500. No, we wouldn't. We wouldn't do this minus 4,500. We would use this minus, see, I'm an idiot. Don't worry about that. Boom. My daughter's texting me, taking a break. Okay, an investor buys one BCD June 90 put at 10 when the market is 84. The market goes to 88 and the investor exercises the option. Choose prior to exercise and they purchase the share at the market price. Let's make it as hard. Excluding trading expenses, what is reported to the IRS regarding this transaction on a per share basis? Okay, so we bought a 90 put at 10 when the market price is 84. The market in the okay, it was just prior to exercise and they buy the shares in the market. So we bought them. So let's see. So we bought a 90 put at 10. So our break even is 80. We're bearish. Wanted to go below 80. We bought it at 88. Right. So we bought it at 88 and then sold it at technically 80 when it was exercised. So lost $8, $800 capital loss. Oh, well, I'm not going too fast. And I got that wrong, but I can't see because it's 1 and 1, right? Boom. Because it went above, right? Let's make sure. My break even is 80. It's above 80. I'm bearish. So it's a loss. Boom. Here, I'll even show you on the, let's do not a teacher. You know, I don't do them. I'll show you, look. So, bought a 90 put at 10. Over here, our break even is 80 because it's always put down. That's my break even. My strike price is 90. I am bearish. And the stock went to 88 where we bought it. And the distance from the break even is 8 points. So that's an $8 loss because the arrow means where we want to go. That's bearish. We want it to go down. That's where we make money. Going up is a loss. We lost $8. Boom. Let's waste more time. Okay. Which of the following CMOs is least volatile? I can't speak today. So plain vanilla, Zetrons, PAX, and tax. All of them are what they are. So remember, plain vanilla is just a normal CMO, has prepay and extension risk. TACs have protection against prepayment risk, but no protection against extension risk. PAX protect against both prepay and extension risk. So the answer is PAX. Awesome. I want to talk to my daughter, so we're going to take a break. Okay, so let's get on this. A 35-year-old investor at the 24% tax bracket with $500,000 portfolio specifies aggressive growth, gambler baby, as their investment objective. The current asset allocation of the portfolio is 25% value, 45 growth, 10 emerging markets, 5% preferred. Okay, 5% spec, and 5% money market. So now I think this is probably okay for aggressive, but I have a feeling that they're going to want to say a majority of the value should be sold and put into emerging markets, okay? Because they're not heavy emerging markets. So really 45% of their 55% of the stuff is a little risky, but most of the stuff is the bonds are sort of on the safer side. So I'm going to say B. I could easily see it being it's okay, but I'm going to say the value should be sold and reinvested in emerging market stocks. I'm going to go with that one. What term is associated with the security trading at a national exchange and a regional exchange? Well, I guess I can say dual listed. I mean, that's fine. Because anything trading in more than one place is going to be, if it's more than one place, it's listed on 2 different exchanges. And the other ones don't mean anything. Second market means over the counter. Convertible, we know what that is. And double negotiable is just a made up word. An investor currently holds 200,000 long ZZZD puts, which has a position limit of 400 grand. The investor wants to add an additional option to portfolio. Which a transaction in which of the following would exceed position limits? So let's see. So long puts are bearish. So all bearish options will move toward the position limit. So long puts and selling calls, you combine them, and that's where your position limit is. So short puts out short. So it's either short calls or short calls. So because they're both bearish, long puts and short calls are bearish. So we have to match them up. That means what that means by same side of the market. So 180 wouldn't be enough because it'd be 380. So it would be fine. So 220,000 would be the answer. So 200,000 plus 220 would be short calls plus long puts. If we're over 400 grand, we're violating the position limit. That's it. By the way, the position limit is really just saying how many bonds on the certain side of the market you can own, because they don't want you affecting the market too much. They even have exercise limits, like per 5-day period, how many options you can exercise at a time. Okay. Bonds issued by which of the following municipalities is always exempt from taxation, meaning it's triple tax exempt? Houston, South Carolina, Colorado, Puerto Rico. So it's got to be one of the territories: Guam, American Samoa, Puerto Rico. Okay, so it's going to be one, and U.S. Virgin Islands. So it's going to be Puerto Rico. It's triple tax free. Now, if you buy the other ones in your own state, then yeah, you're not going to pay taxes. But Puerto Rico ones are always, no matter who you are. Okay, an investor goes short at 1 KO, just DEX 60 call at 7, and short at DEX 60 put at 450. When the market is 650, the investor will experience a loss at all the following except, okay, so this is a short straddle. We have, what is that, 1150? So we're going to add up. I'll just draw it out so we can have it. So there's our 60. So we're going to go up to 70 as it is 7150. And what is that? 49.50. I can't do the math. Okay. So that's the range. Now, since it's a short straddle, I want it inside the range. So 2 laterals in. So anywhere in there, I make money. Anywhere out, I lose. So let's go. We're going to lose money at 47.50 because that's below. We're going to lose money at 72.50 because that's above. 47.25 is below. That's outside the range. So it's got to be 71 because it's only one inside the range. You're not making a lot of money, but you are making money. So it's got to be inside the range, 71. Oh, another option question. An investor sells when ABC July 50 call at 6. When the market is at 52.50, the market price rises to 58.50 and they're assigned the contract. I sell at 50 call at 6. My break even is 56. The stock rose to 58.50. I'm bearish. It went 2.5 points above my break even. I lose 250. Got to be a loss. And it's cool. My daughter's friend, Sam Geyer's back, won MVP of the women's final. How great at women's lacrosse final. Amazing. Richmond Spiders going to North Carolina and making a mark. An investor takes part in an offering of securities that are not registered through traditional methods with the SEC, while also being subject to purchase limitations. Let me read that again. An investor takes part in an offering of securities that are not registered through traditional methods, while also being subject to purchase limitations. What offering is this most closely aligned to? So Reg T is not it. Reg S is not it. Reg A Tier 1 or Reg A Tier 2? Ah, interesting. So this is an interesting one because Tier 2 has limits on how much it can buy, but tier one also says you can only raise a certain amount of money, but I guess they both do. So let's keep in mind how this works. So Reg A plus tier one, pretty much anyone can buy. You can buy as much as you want, but they can only raise up to $20 million, 20, 25, 20 million. Reg A tier A plus tier two is up to 75 million, but non-accredited investors are limited to how much they can buy. I'm not even sure it's a credit. I always thought it was like, if you make kind of under 100 grand a year, you can only buy a certain percentage, and over 100 grand a year, you can buy more. I'll look into that. I won't get it by today, but anyway, the whole point is tier two, they will have limits on how much they can buy if you're not qualified, if you're not a high enough income person. I'm going to look that up right now just to check. So yeah, so it was a credit. Anyone not accredited can only put a certain amount of money in. I think I was thinking of crowdfunding, where if you make under 102,000, you can only put so much in, and if you make over 102,000, you can put more in. That's under crowdfunding. But yeah, so on the Reg A tier one and tier two, Reg A tier one and tier two. Tier one, there's no limits on what people invest, but on tier two, if you're unaccredited, there's a limit. You can only put in like 10% of what your income. Which of the following securities is least suitable for an investor specifying a capital appreciation investment objective? Least suitable. So we want capital appreciation, that's some sort of growth. I would have to say callable preferred, because preferred is about income. Preferred bonds are all about income, not growth. Good. An investor goes short one, October 1, VIX 40 put at 350. When the VIX is 43.50, what's the max gain? Well, whenever you sell something, the most you can make is what you got. So it's got to be 350. Make sure it's only one of them. Always double check. If you see a number and you're like, wow, that's easy, always double check to make sure that you're not doing more than one of them and you're doing the math wrong. Good. All of them are defined as and considered securities except. Okay. So pretty much, if I ever see a name of something and it has the word fixed in front of it, fixed UIT, fixed annuity, life insurance, I usually think it's not a security, right? Okay. So DPPs are, they're not very liquid, but they are. ETFs definitely are. And RANs are. So it's got to be fixed annuities. I love it. Awesome. An investor learns of the short interest theory and then incorporates the theory into a trading philosophy. Which of the following statements relating to this theory are correct? None. We'll come back to that. High short interest is bearish. No, because high short interest is actually bullish because we think people are going to be short. They'll have to buy it back. We'll force it to go up. Short interest is based on fundamental. That is absolutely not true. Short interest measures the percentage of outstanding shares currently sold short. I think that's the answer. And the higher the short interest, make sure which of the following is correct. Good. Okay. They're giving you a percentage. Like that was the whole thing with GameStop, is that when they looked at it, at one point it was 136% short, which is crazy. That means they had 36% more shares in the short positions than actually outstanding, which is untenable. And that's why it rose so much. So the answer is short interest theory is a belief that if you see very high short interest, it's actually a bullish thing because they eventually have to buy it back. An affiliate holding unregistered shares is subject to which of the following? 6-month hold, volume limitations, and 6-month holding period, volume limitations only. This is tricky. If it was just unregistered, it'd be just a 6-month hold. If it was just affiliate, it'd be volume only. But since it's an affiliate holding unregistered, they have to have volume restrictions and the 6-month holding period. So they have to follow the 144 rules for the volume restrictions and the 6-month holding period or so. Good. Due to FINRA rule violation, a RR license is suspended for several months. What is true? The rep may only work in a clerical capacity for the firm during their suspension. The suspension is not publicly disclosed. That's not true. The suspension can be appealed. That is true. Since they're not all true, it can't be all of them. I would have to say the suspension can be appealed because it's not arbitration. Could be wrong. A 59-year-old customer contributes $5,000 to their Roth. How much can they contribute to their traditional? It's 59. That's tricky. So they're over 50. They have the catch-up provision. So they can do a total of $7,000, 5 to the regular, 5 to the Roth, 2 to the regular, baby. There we go. If they were under 50, you can only do another 1,000. Wonderbar. Which of the following best describes a series bond issuance? Okay. All bonds issued on the same day, mature on different day. That's serial. Bonds issued and mature on the same day. Boom. That's a term. Which of the following best describes a series bond issuance? All bonds issued on the same day, mature different day. That's serial. All bonds issued and mature on the same day. That's term. Bonds issued and mature on different days, and then bond issued on different days but mature on the same day. Technically, they could do both, but what it's going to have, they could do both. They really could. But it's going to be the bottom right. Bonds issued on different days and mature on the same day. They can do anything they want in reality, but I'm going to say it's all different days, but they all mature on the same day. That should be series. Which of the following accounts allow customers to borrow money for investment purposes? That would be a margin account, right? Option account, those options. Cash account means you're paying a full percent for everything, full 100%. And discretionary just means that the rep can make choices more than time and price. They can do either, they can decide buy or sell, the amount or the security. And they can even open a margin account for you. Okay. So bottom line, if you hear the word borrow or anything money, it's usually going to be through a margin account under Reg T. And who runs that? The Federal Reserve. Can't find my damn mouse. There we go. I could just use a touchscreen because I'm an idiot. A 25-year, 5.5% bond is quoted at a 7-point premium. What is the order of yields from high to low? So premium, we got our triangle. Coupon, current, yields to maturity, yields to call. So let's start with that. Coupon or nominal is first, then current, then yields to maturity, yields to call. Get that stuck in your head. Coupon, current, yield to maturity, yield to call. Coupon, current, yield to maturity, yield to call. Boom. FA bonds are issued by municipalities to fund which of the following endeavors? So PHA stands for public housing. So we know where it's going to go. Economic development, that could be tricky. Community improvements, no. Turnpikes, no. Should be affordable housing because the word housing's in it. Sometimes it's on the nose. Dividend income is considered what type of taxable income? That would, it's not passive because that's DPPs and shit. Earned income, no, it's not active. So it's got to be portfolio income because earned income is like salaries. Like earned income is what you can use for IRA contributions. It's salary, royalties, bonus, commissions, shit you earn. Good. Okay. So it's going to be portfolio. So if you made $1 million a year off portfolio income, meaning dividends, you still couldn't put a dime in an IRA. Divided selling responsibilities and liabilities during a new issue muni sale relate to what underlying? Southern, northern, out. So it's either Western or Eastern. Easterners were all together, like Eastern Bloc countries, what Putin is trying to do. Make it all one big country again. We're all together, whether they like it or not. So Eastern is undivided, and we're all together. And we share the responsibility. Western is you're on your own, baby. You're on your own. It's totally independent. It's divided, okay? Because you don't. If Western means that if I'm supposed to sell $1 million worth of bonds and I only sell 400,000, I'm on the hook, not you guys. Where Eastern is, same scenario. I'm supposed to sell $1 million. I only sell 4. That's 600 unsold gets divided between all of us, and we have to divvy it up between, and we all have to try to sell again. So this is going to be Western. Which of the following best describes a term bond issuance? Okay, we know what term is. It's one issue, one maturity. So let's find that. Top left, no, that's serial. Bottom left, yeah, that looks right. Bottom right, top right, no, that sounds like series. And bottom right sounds like series 2, but it's not. Okay, so we're going to go with bottom left. Term is one issue, one maturity date. An investor's account, you find one short CVX Feb 75 put and one long 75. So this is a spread, which was obtained through a transaction, creating a net credit of 475. What's a break even? So we have a net of 475 since it's a put spread. Since put down, call up, you're going to subtract from the high. 75 minus 475, it should be 70 and change. See, they were tricky. You got to do 75 minus the 475. So minus 471, another 75 cents is 25. You should do it in your calculator, but I'm cocky. I'm going to go with 70.25. And am I bullish or bearish, guys? Think about this. Since it's a credit, so that means the 75 is the dominant because the higher strike anyway. This is going to be a bullish. So anything above 70.25 is a gain. So I could make 475 and I could lose 5.25. There you go. Which of the following is most likely to have debt service performed by legislative apportionment? Which usually I think it means, if they're being tricky, is them trying to say through legislative where they vote on it after you're in trouble. So I'm going to go with more obligation because Build America bond is backed by the government. NHA, I don't know. Special tax bond only could be for certain things like gas taxes and shit like that. And more obligation is where it's a revenue bond. If we run out of money, we can ask the town to help and they can say no, but it has to at least be voted by the legislator. Other than a double barrel, which is like a revenue bond, but it's ultimately backed by the promise of the city or town to pay the taxes. So it's more like a GO as a backup. Which of the following risks is considered non-systematic? So non-systematic is, I was going to say it. That's interesting. Financial, see, since I think it's two of them, business and liquidity, I got to go with all of them. Financial's losing your money, right? So business risk is there. Liquidity risk, you can get rid of that by diversifying by ETF. So I'm going to go with all of them are considered non-systematic because you can get rid of them, all those risks by diversifying. Variable rate demand notes rarely trade below par. Because why? Because the VRDOs, that means you can sell it back at par anytime you want. So why the fuck would it trade below par? If you know you could sell it at 1,000, why would it ever trade for less than 1,000? Would never happen. Out of my drink. In an account, an investor is long one MOO July 80 put when the market is 78. I don't care. They want you to create a bull spread. So a bull put spread. So bull put spread means what bullish. That means I want the sell put because sell puts are bullish. I want that to be the dominant, right? So I want that to be the dominant. The only way that's dominant is either longer month or higher strike because puts are right to sell. So the higher strike put or the longer month is always going to be dominant. But on a put, the higher strike, and a call, the lower strike. So I want the sell of a put to be the dominant. So I want to sell the higher strike. So we can throw out the calls, the bottom two are out. So the 90 put is more attractive than the 70 put in general, because the put gives you the right to sell. I'd rather sell at 90 than 70. So 90 is the more dominant. Boom, since I want it to be a bull put spread, it's got to be that. The reason it can't be this one up here, the long, is because long the put is bearish. So it can't be the dominant. The bull put spread tells me that I want the bull to be dominant. Typical characteristics of a bond with marketability risk include which of the following? Marketability risk is like liquidity risk. So surplus of demand, active trading, all are out because there's some reason it would trade. I would go with inactive and lack of demand, which means nobody gives a shit about it and it's not trading that much. So there's liquidity / marketability risk. There we go. Where the fuck is my mouse? There we go. Which of the following municipal bonds would most likely come with most likely to come with the highest yield? Interesting. Well, I'm going to say, see, a 10 is short term, so low yield. GO bond, pretty much tax-free. They're safer in a general. Lower, so that's going to go lower. PHA bond or airport bond. I think PHA bond has some federal backing in the housing, so I'm going to go with airport bond because it's purely revenue. Okay. An investor purchases a newly issued TIPS par 1,000 from the Treasury. CPI is reported at 3% by the time the first interest payment is due. What statement is true? The coupon adjusts? No, you do not adjust the coupon ever. The investor receives part maturity, probably not receive more because the par value is adjusted. Okay, the par value doesn't change, so we can go right away and see that top right is the answer because you know that par value does get adjusted, not the coupon. So top left and bottom right are out. Once they adjust it, you're not getting maturity; you're getting the higher of the two. So let's do this. So CPI went up by more. Okay, So by 3%, so now the par value is now 1,030. 3% of 1,000 is 30. So we adjust the par value up to 1,030. So that 3% of 1,030 should be whatever that is, the 3090 or something like that, right? I don't know the number, but I do know that the first interest payment will be half of that. So the first payment will be 1,545. It's got to be. Just there we go. How did I get this open? I have a screen. I don't know if you guys can see that. Stupid screen just opened. I don't know how to fix it. There we go. NAV for a publicly traded fund is best described as which of the following? A guideline for publicly traded, right? Purchase price, no, not redemption. Now it'll be the redemption price for a mutual fund. Minimum purchase price, I guess that would be the same for mutual fund. With no load, publicly traded, trade all day long on the market. So there's supply and demand. So the NAV is the value of the company, what it's worth, but it's more of a guideline for the value. It's got to be, because you can buy and sell at the market price. So it's not redemption price either. Okay. Which of the following is reported on the tax form 1099 div? Good question. I just forget this one. I'm probably get this wrong. Capital gains, no. Stock dividends. So it's got to be cash dividend. It's only one. I mean, it sounds stupid they do that, but shit, when it's on the nose like that, you definitely got to think about it. Sure, for the yawning. So stock dividends, no, because you don't pay taxes on it. Cash dividends, yeah, because you're going to owe taxes on that shit. Okay. Which statement best requires a YTM, yield to maturity of a debt instrument? Total return of a bond if held to maturity. I like that one. I shouldn't have said it, but it's not the discount gained over the bond's life or the premium. You have to include the other stuff too, the interest and the interest. So like the other answers are a part of it, right? If it's a premium, you get the discounted amount. If it's a premium, if it's a discount, you get the increased amount every month, every year. But yield to maturity also includes the interest. So it's got to be total return of the bond if held to maturity. Boom. A long straddle is most suitable for what market sentiment? Long straddle volatility, short straddle stability. This should be an easy one. Boom. In the event of a highly demanded primary offering, what is the underwriter most likely to enact? I know right away. So let's talk about stabilizing bid. That's done after it's issued finally, and you buy it to hold it up. But if it's a lot of people want it, it's not going to trade down. So think a stabilizing bid is placed by the lead underwriter or one of the underwriters, and they buy the stock to stabilize the price. They're kind of manipulating the price to keep it above, at or above the IPO price. So it's not embarrassing. A market out clause is if the shit hits the fan and the company I'm recording the one video for that now. It gives the underwriter a way to get out of their responsibility, the obligation, without paying a penalty because something crazy happened, like COVID or the financial crisis or something horrible. A penalty bid is like a stabilizing bid, except for it's what the lead underwriter penalizes the other market makers, the other syndicate member. So if I'm a syndicate member and I take my offering and I sell my portion of my shares to people who sell right on the opening, well, that's not the purpose. The purpose is to sell to investors. So if they realize that my investors are selling right on the opening of the new shares, the lead underwriter is going to enact a penalty, but and take money away from me. So, by the way, so the answer is green shoe. So every time if a company is issuing shares and it's really high in demand, a green shoe clause allows you to sell an additional 15% over the original amount, and they almost always add it in there, and the companies are fine. But it's a max of 15. They won't let you do more than that. Market maker publishes the following quote to stock: 46 by 4620, 500 by 800. What statement is true? I might have given it away. Because remember, that's 5 round lots by 8 round lots. A customer can sell up to 500 shares at 4620. No, because that's where it's being sold. So your customer can't do shit at 4620 other than get alongside the seller. A customer can buy up to 800 shares at 4620. That looks kind of good because the market maker is willing to sell 800 shares at 4620. You want to buy them there? I think that works. A customer can buy up to 800 shares at 46. No, because there's already a buyer there. And a customer can sell at 800 or 4620. That doesn't work. So remember, you buy at the ask, you sell at the bid. The market makers get to buy at the ask or sell at the bid more. But if you want to buy stock right now, you have to pay the ask. If you want to sell, sorry for the big yawn. If you want to sell stock right now, you have to sell it at the bid. Boom. I almost did it wrong. Boom, we can buy up to 800 shares at 4620. Which of the following are considered fiduciary accounts? Okay. Not a partnership. Joint tenants account, and no, we're kind of partnership, we're kind of with each other. And a margin, no. Trust account. A fiduciary means you're managing it for the benefit of someone who can't or doesn't. Okay. What is the primary benefit associated with muni bond investments? Interest. Tax-free interest. Remember, that's what muni bonds pretty much. When you think muni, think tax-free. Okay. In a deflationary environment, what will a TIPS investor receive at maturity? The original par value. They will get, it'll remember, so each month, if you have a deflationary economy, which isn't a thing, the par value will go below par, but no matter what, you'll get at least par back when it redeems. The lower par value is really just for calculating the new interest payments, but you will always get back your original par value. You never get less than that. Okay. All of the following are defined and regulated as investment companies except. Remember, FUM, F-U-M, sounds like it's fun, but it's not. Face amount certificates, is that there? Yes. Unit of a trust, yes, that's there. Management company, yes, that's there. Hedge funds are unregulated. They're not regulated as investment companies. Hedge funds are like mutual funds, but they're unregulated. And they're only for accredited investors. The bid for a mutual fund represents which of the following? The bid for a mutual fund, it's the NAV. NAV plus sales charge equals POP, right? NAV plus sales charge equals POP. NAV plus sales charge equals POP. Sales charge is 8.5% of the POP. You buy at the POP or less if you have a break point, and you sell at the NAV always. That's redemption. Boom. And that's the bid. Boom. Long-term investors with smaller deposits are suitable for what mutual fund shares? Let's go with B. B, because you pay on your way out. Well, you're about to park. You pay on the way out, but the longer you stay in, the lower the sell charge is going to be. Because A is for long-term, a lot of money. Good. All of the following are voting rights of a common stockholder except right to vote for stock split. I agree. Right to vote for board of directors. Yes. Right to vote for dilutive securities, which is like convertible securities and bonds. Yes. And the last one is right to vote for CEO. That is not the case. You cannot vote for the CEO. You can vote for the board of directors. If a customer does not pay for a purchase of Reg T settlement, the broker-dealer may perform which of the following? Sell the securities are purchased. Yeah, that's true. Report the customer. No. Refuse to do anything. And they don't request the extension from the SEC. They request it from the SRO. So the best answer here is sell the securities that are purchased. So if you buy stock on Monday, you know that settlement is T+2, but Reg T settlement is T+4. So you actually have 4 days to pay for it. So if you buy it on Monday, you have till Friday to pay for it. And if you don't pay for it in time, they can ask for an extension from the SRO, not from the SEC. And that's why top right is wrong. So they can sell the securities, boom, to get your money back. And that's called free riding. And if you do that, they will freeze your account for 90 days, which is not a big deal. It just means when you do trade, you have to pay for it up front. A customer of yours firm goes long 1 ZZZZ, September 40 call at 12, when the market price is 46. Several months later, the market goes to 42 and the options is closed at intrinsic. Sometimes I'm reading out loud and I don't listen to what it is. So I bought a 40 call at 12. My break even is 52. Stock went to 42. 52 is my break even. I'm bullish. It's below that. It's 10 points below. I lose 10 points. That should be $1,000 loss. Everything's about the break even, people. Everything is about the break even. An investor buys one ABC June 25 put at 575 and the market is 21. Okay. The market price rises to 35.25 on expiration date and stays there until the end of trading. What is the investor's gain or loss? Well, I bought a 25 put. It goes above 25. It's going to expire. So I'm going to lose 575. So they'll lose the premium. That's it. Class A shares of an open and management company are suitable for what type of investor? Long-term, lot of money. Class A is always long-term, lot of money because you get break points. The more you invest, the lower it's going to be. And I'm back. I have family coming in and around, and it's basically Memorial Day weekend. And I'm sitting in here doing this shit. Okay. But I do have a student in half an hour, so I might not finish this. You'll see me post that. Okay. After my my series 65 and 66 and series 7 group chats, my membership classes. A new employee of a broker dealer is filling out a FINRA U4 form to become a registered rep. What statement is true regarding the information placed on the form? Any felony or misdemeanor conviction could result in a statutory disqualification. I like that. We'll come back to it. Employee must disclose your 10-year rent. No, you have to 5-year residence. Employee must disclose 5-year employment. No, it's 10-year employment. And pre-dispute arbitration agreement is embedded in the U4. I like that more. So here's why the top left is wrong. Any felony or misdemeanor conviction. So any felony, yes. Only securities or ethics or monetary related misdemeanors would result in statutory disqualification. So it's got to be bottom right. Guys, if you like what I'm doing, please hit like, subscribe, share this shit to other people. Also, don't forget, I do the membership classes every Sunday, like tonight. You won't see this till it'll be next Sunday. And I'll be doing it from Florida, baby. Every Sunday night at 6 p.m., I do a membership class for this series 63, 65, 66. And then at 7 p.m., I do one for the series SIE 6 and 7. And really $25 a month, it's a fucking bargain. And you know why it's still $25 a month? Because I don't know how to change it to 50. So we're stuck with that. I do know how to change it, but I'd have to delete it and I'm too lazy. So I'm just taking the loss and doing the $25 a month. Guys, join up. Just hit the join button on a laptop or desktop. Come join us on Sunday nights. Have a little fun. Okay. A no-load fund does not change any of the following except. So a no-load fund does not change except. So what does it change? Right? Charge. Wow, I can't fucking read. Look at that. A no-load fund does not charge any of the following except no back-end load, no front-end load, no contingent deferred. They do have management fees. And they do charge 12B1s. Remember that. A no-load fund can have a 12B1 fee, but it has to be under 25 basis points or 0.25%. So they do charge management fees. They absolutely do. Your client has 1.4650 million portfolio of numerous small cap securities. They're concerned about market risk and ask for your guidance on how to reduce the risk. So they have small caps, very narrow based, right? So what they're going to do is you're going to look at a narrow based index. Remember, the small caps don't always correlate with the large caps, right? So the S&P is all about large caps and shit like that. So maybe we don't do the SPX calls and puts. So we're going to go with index puts or index calls. If you have a portfolio, no one has a short portfolio. So if you have a portfolio, it's a long portfolio, which means we're long, which means we're looking to protect on the downside. So we're going to buy fucking puts. Okay. We're going to buy puts on the Russell, which is the RUT. So we're going to buy index puts. Because this way, what happens is if your portfolio is a bunch of small caps, the thought process is that if all the small caps drop, your portfolio is going to go down. But you can actually offset that and hedge it by buying a put, because if the index drops, your portfolio is going to drop the same amount. So you'll make more, hopefully enough to make enough on the index put to offset what you lose on the portfolio. Which of the following securities is least suitable for an investor specifying high yield income? Okay. Boom, 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 boom. Here we go. So high yield income. So speculative, yes. Callable would have a higher yield, maybe. Straight preferred would, but convertible would probably not, would have a very low coupon because it's very good for the investor. Remember, callable is not great because you want non-callable bonds or preferreds, right? So callable preferred is gonna have a higher coupon because it's riskier. Straight preferred. Convertible preferred is gonna have the lowest because you're adding that great value of growth coming from converting into stock. So that's going to have the lowest coupon. So that's at least suitable for high yield. Oh, they do this. So now pay some annual. Thank you. An investor purchases 275 shares of Elliott's $25 par 6 1/4. So first thing you have to do is do 6 1/4% of 25 because they're fucking with you. So 25 times 0.0625 is going to be $1.56. Now, how many shares times 275? Can they make it? That's $429 per year. I'm going to divide that by 2. That's going to be 214. That better be there. 214.84. Boom. Okay, so how did I do that? I did 25, 6 1/4% of $25 was my number. I multiply that times 275 shares. That's how much I get every year. I divide that by 2. Boom, 214.84. Watch, I'm wrong, even being cocky. Minimum maintenance requirements are set at what level for a long margin accounts? Remember, so long is 25, short is 30, because short is riskier, so they have a higher maintenance. Issuers of muni bonds include all the following except. Okay, so munis is state on down. Okay, so city, state, political, yes. Federal government is not a muni. That's federal government. Awesome. Good. Reg T regulates a relationship between which two parties? Reg T is always, you always think margin, but it's also anything to do with the broker-dealer and the customer. Anything to do with money between the broker-dealer and the customer. Reg U is for the bank and the broker-dealer. Reg X is for foreign. Which of the following is false about bankers' acceptance? They're exempt, and I think they are. Boom, boom, boom. So they're exempt, they're short term, right? So they're under 270 days because they're money market, they like commercial paper. They are exempt. They do work for international trade. They will not be required to have an IPO because they're exempt. That's the whole point. Anything exempt doesn't need a prospectus during the IPO. And really, my grandma and grandpa don't buy this shit. This is usually institutions that are doing trading, international trading, trade that would do this. Which of the following options are combined for position limits? Remember, so same side, bull and bull and bear and bear. So we got to find 2 bulls or 2 bears. Short calls, long calls, out. Short calls, long puts, that might be it. Short puts, short calls, no, they're both, one's bearish, one's bullish. Long puts, short puts, those bull and bear. So it's got to be short calls and long puts because they're both bearish. Which of the following debt securities is considered investment grade? So investment grade is BBB or higher. Anything below BBB is speculative. So we're going to go with, let me just make sure we got no tricky. BBB rated. I like it. Everything else is below. That's an easy one. A customer of yours, I'm getting dry mouth. A customer of yours asks you several questions regarding a 529 plan. They want to create and fund for a family. They want to create and fund for a family member. Sometimes reading retention is not my thing. Which of the following statements is false? So it's not true. 529s are state-sponsored plans. That's true. Up to 1,000 of 529 funds may be used annually for education expenses not related to college. No, they can use 10 grand. 529 are non-tax deductible. Yes. 529 plans are offered tax-free growth. That's true also. So it's going to be, you can give a lot more than 1,000, up to 10 grand. Okay. My wife is showing up, so I'm going to do 2 more and then I'll take a break. I'll come back later. You'll see that you'll see it to be negative by the time I come back. An investor purchases stock on the ex-dividend day for a dividend payable in a month. An investor purchases stock on the ex-dividend day for a dividend payable in a month. What statement is true? The receipt of dividend is up to the seller? No. They receive the dividend? No, because X means without. They will have the option to receive the dividend? No, they will not receive the dividend. That's damn right. Good. A client is researching currency options and funds 1 long New Zealand dollar at 90 put at 3 when the euro is trading at 91. If they were to perform an opening purchase, what would they pay? Client is researching currency options and funds 1 long New Zealand dollar 90 put at 3. If they were to perform an opening purchase, what would they pay? They'd pay 9,000, right? What do they, oh, at 3. What am I doing? $300. I'm reading it wrong. I'm not paying attention. Okay. I'm going to take a break. We're going to come back to this later. Hey, if you like what we're doing, please hit the like, subscribe, share this shit to people. I'm hoping to help. Let's give back a little bit. Have a great day. Back to our regularly scheduled programming. Okay, I'm back. I'm even clean shaven. After a long hiatus, of a weekend. We're back on to the last 45 questions or so. So let's get on to it. Don't forget, like, subscribe, and share. If you really like what I'm doing, don't forget the notification button. Join my lives every Tuesday and Thursday night, 8:30. I'm the OG. I'm the original. All others come after me. Okay. Copycats, if you want to call them. Okay. A subsidiary issues a bond which is guaranteed by its parent company. The credit rating of the bond is based on which of the following parties. So a guaranteed bond. So as Federal Reserve, no, they don't do shit. Moody's, they're just Moody. They're grading your ass. Subsidiary, no. It's going to be the parent company. So a guaranteed bond is one that's backed by a parent company. It's still a debenture. It's still unsecured. It's just backed by the parent company. So it gets a credit rating of the parent. Which of the following investor profiles is least suitable for an investment in preferred stock? Least suitable. 25-year-old high risk tolerance, seeking capital appreciation. I'm liking that one. I'm a likey. 41-year-old moderate risk seeking income. That would be it. 59-year-old low risk seeking income. No. 34-year-old moderate risk seeking capital appreciation and income. Okay. So there you go. So it's either the 25 or the 30, but I'm going to go with the 25 because they're only looking for capital appreciation, not any income. So I would say that would be the least suitable, but let's find out if I'm wrong. All right, there we go. An investor purchases a 4-year, $1,000 par, 12% treasury bond for 104. The investor holds the bond to maturity. If they do not amortize the bond, because why the hell would you? What are the tax consequences in the maturity year? I get this thing wrong every time. So let's see. So if they do not amortize the bond, they hold it to maturity. I'm going to say, I never fucking know this and I don't give a shit. So I'm just going to put in, where are we? 4-year, 12% bond for 104. We have 12%. I don't see that anywhere. This is the one thing Achievable does that I don't think the test would ever do. So I never learned this shit. Let's say no capital gain or loss. I'm going to have to go with one of those two. I'm going to make it up. I'll choose that one. I have no fucking idea. But I don't worry about it. I'm not going to cry about it. I'm just going to move on. An investor places a sell stop order for stock. If the market price falls below the stock price, what will occur? So we put slobs over bliss. So this is a sell stop. It's below the market. If it gets down to the thing, it will trigger, right? So if it gets below the stop price, it will trigger and then trade. But they only want to know that. They want to know what will happen. It'll trigger. Or they'll say either trigger or exercise or elect. Maybe not exercise. They usually say elect or trigger. There are certain advantages and disadvantages for corporations when issuing equity or debt. Which of the following statements is false, not true? We're looking for the incorrect statement. Bondholders have voting rights. Bondholders are guaranteed interest payments. It sounds like it'd be wrong, but it's right. The company guarantees. You can't, but the company can guarantee it. But that's only as strong as the company is. So that one's true. Stockholders are not guaranteed dividends, right? You have the right to receive a dividend if declared, but there's no guarantee. And stockholders do have voting rights for certain things. Bondholders do not have voting rights. So that's the false statement. Boom. That the bondholders have voting rights, they do not. So it's incorrect. Good. Immediate resale of securities purchased in Rule 147 offering is allowed if, what's 147? That's one state only. I can sell inside the state whenever I want, but I can only sell out of the state after 6 months, right? So I'm only allowed to sell it right away if I'm selling it to someone inside my state, and boom, there it is. State resident. Good. An oil and gas limited partnership employs an overriding royalty interest. God, I fucking hate these. I fucking hate these with a fucking passion. I really do. Okay. An oil and gas limited partnership employs an overriding royalty interest. As I said, I fucking hate these. Royalty interest arrangements for landowners. The partnership drills on. Blah, blah, blah. What best describes this type of arrangement for the landowner? I gotta think. Okay. If the GP should have small, they should not have to pay a lot of the expenses, but get a lot of the money. So I'm going to say it's going to be this: small liability for expenses, collect revenue immediately. Who the fuck knows? I don't care. I don't think they go this deep on the test, but here it is. An investor dies, passes away, and their family starts gathering their financial documents. Little greedy pigs. When a family member calls a broker-dealer holding the decedent's brokerage account, what can they expect to occur? Notification to FINRA? No. Cancellation of open orders and account marked deceased. Okay, we'll come back to that. Liquidation of it. No, they're not going to do that. And notification to FINRA. So they're not going to liquidate your damn shit. Okay. They're just they're going to wait. They're going to cancel any order that's open, any GTC order. And then they're going to mark the account deceased and then wait for documents. So I'm going to say it's going to be that one. Cancellation of open orders and account marked deceased. Who knows? During the account opening process, a customer's identity can be verified by checking which of the following documents: tax return, birth certificate, health insurance card, TransUnion. I got to think birth certificate. Watch, it's going to be tax returns. But I do think that's what it's going to be. They could use the credit thing to verify it. That could be where they're going with it. I'm most wondering where we are with this. Thinking. During the account process, a customer identifier, you can use a birth certificate to see them, but I think, you know what? I'm going to go with the Equifax or TransUnion database. So it's usually going to be a credit union. That's how they can verify to make sure all this shit works. You ever log into something and then it makes you like fill out like, what was your last address? Which one of these addresses are you associated with? Such a pain in the ass, but that's how they kind of verify your shit. Okay. A registered rep writes up a thoughtful letter offering free financial analysis to help her customers save enough for retirement. The representative runs a letter by several of her colleagues, and they all give her good feedback. She immediately sends a letter to 21 retail customers, which is true. So under 25 or less is correspondence, over 25 is retail, big difference. Okay, communication should have been pre-approved by FINRA. Remember, no, FINRA doesn't approve shit. No regulator ever approves shit ever. Communication kept on file for 2 years. No, that would be 3 years. This communication is retail. That is not, because it's under 25. The communication did not require pre-approval from a principal, and that is L answer. Good. An investor analyzing the market and returns of a large cap fund held in the portfolio. The fund was up 25.56 while maintaining a beta of 1.4. Then the same year, motherfucker, they don't do this, but they want to put this shit in here. Fucking piss me off, but let's do it. Okay, I got to do the math. I'm going to pause this for a second while I do the math. Then I'll walk through it. Okay, so these are the numbers we care about. And then we care that the fund was up 25.56. And again, this is deeper than you need to, but here's what we're going to do. First, the T-bill rate is always what they call the risk-free rate of return. Okay, so we're going to subtract that from S&P. So 14.4 minus 2.3, I think it's 12.1. Let's see, 14.4. I can't type 14.4 minus 2.3 equals 12.1. Okay, so that's 12.1 is my, you take it out of the risk-free rate out. Okay, so now then we multiply that. So we do the 12.1 times the beta times 1.4. That's going to equal, I think, 16 and change, right? 12.1 times 1.4 equals 1694. So that's 1694. That's, again, our beta adjusted return, risk adjusted. Now, our fund is 20, we return 25.56. So what's our risk premium? We have to suck out the T-bill rate. So we're going to do minus 2.3. That's going to be 25.56 minus 2.3 equals 23.26. And then to get the alpha, we're going to subtract the alpha from that 1694, 16.94. And that's going to be 23.26 minus 16.94 equals 6.32. So it's got to be 6.32. Okay, so most of the time they'll only make you do this. Most of the time they'll make you do this. There's the S&P, you multiply times the beta, and then you compare it to the fund. This is if they give the risk-free rate. You heard me curse. I fucking hate it when they do it because I don't think the test does it, but you got to be risky because I think more in the 65 than the 7, if anything. But I don't think they'll do it. But I like when it's good when they challenge you more, right? I want you to feel the same shit I feel. That fucking frustrating when you see questions that are just driving you nuts. So I'm going to go 6.32. Boom. Okay. An investor seeking monthly income would likely invest in which of the following funds? I would go with, again, I could be wrong, a Ginnie Mae fund. It could be growth and income, but I would think it'd be Ginnie Mae because they're mortgage-backed securities and they pay every month. I don't know. I'm guessing. A 53-year-old client of yours residing in Arizona is currently in the 35% bracket. Boo, big buckers. They seek an income-producing investment and inquire about the tax status of muni bonds from the state of Ohio. What is the tax status of the muni bonds interest? Well, we do know that they won't pay federal, so it's exempt from federal. So there's your answer. Good, right? So it's exempt from federal, but you are subject to state and local, because if you buy a muni bond in a state that you don't live in, you're going to pay state taxes. Because if you're in Arizona and you buy an Ohio bond, why the fuck would Arizona give you a break on taxes when you're helping out another state? They'll be like, fuck you, pay me. Okay. Which of the following parties is exposed to market risk related to a variable annuity? So a variable annuity means you're invested in the market in a way through your separate account. So you're taking on the market risk. So that's going to be the customer, the investor. Because the RR, the insurance company, and the broker dealer don't have market risk. If it's a fixed annuity, the insurance company would have the market risk. Good. Which of the following parties is employed by and helps implement the strategies of large investment portfolios? Who would do that? Implement the strategies. That's interesting. I don't know the answer to this. Employed by and helps implement the strategies of a large investment portfolios. I guess it would be the market makers. Maybe the traders. I'm going to go with traders, even though they're kind of the same thing. I'll go with this one. I got to get one wrong, right? Okay. An investor goes long a UNH, makes 270 call at 17 1/4 and short 290 call at 775. That is a spreado. The market goes to 293 and the contracts are closed at an intrinsic. So that's going to be, since it goes outside the range. So let's do this. So first things first, let's do it the way we're supposed to. So we have a net. First thing is get the net, right? So 17.25 minus 7.75 equals, so that's our net of 9.5. That's probably going to be a number, maybe 9.5. That could be a number, but maybe not here. Okay. And that's going to be a debit because we spent more than we wrote it. Boy, I do that every time. Okay. That's good. Now I draw the road. I put the higher on the top. They got to do really hard numbers just because they got to drive me nuts. They know I hate numbers. And that's not the higher none. I do that one. And I put 270 down here. Now, how do I do the break even? I'm going to add that. So I'm going to say my break even is 279.5 because I'm adding, since it's a call spread, you add to the lower. If it's a put spread, you subtract from the higher. Call up, put down. I mean, it's not fucking brain surgery, right? So watch, I'm wrong on this, but 279.50, that is it. Now, I am long the bigger one. So it's a long, the bigger premium is the dominant. That's long. So I'm bullish. So I want it to go up. So from 279 to 290, 279.50 to 290 is my gain. So because remember, once it goes above the strike price, you're done. Okay. Once it goes below the strike price, the lower or above the higher one, you're locked in. So 290 minus 279.5 equals, of course, I can't do math. So 290 minus 279.5 equals, should be 1,050 gain. Boom, there we go. I gotta delete all this. Hope that helped. Boom. Okay. Hedge funds are typically only sold to what type of investors? Rich people. Haven't you guys watched Billions? Accredited investors. Boom. 44-year-old Ellis, a 44-year-old investor with a net worth of $7 million and an annual income of $500,000, is seeking. Well, it sounds like that sounds like Shark Tank a little bit. Is seeking an investment that will profit in a flat market. They're comfortable with risk and have an aggressive investment objectives. What would you recommend? So let's think. We want something that's flat. So let's see. So leverage inverse, no. Speculative, no. Short call spread is going to be bullish or bearish. It's got to be a short straddle because remember, short straddle stability, boom, flat market, short straddle stability. But the reason you have to be aggressive in a way is because there's unlimited risk. Whenever you sell two things, you have unlimited risk. Okay. An investor is short and a 160 put and wants to create a put spread. What option would you recommend? Well, we have to do another put. So it's going to be there's two puts and it's buy one, sell the other. So it's going to have to be, So if a spread is going to be buy one and buy a put, sell a put, right? So we throw out the calls, boom, and then we leave the two puts, and sell would not be anything. So it's long and sell. So it's going to be long the 160 put. And let's say, oh, we don't, yeah, we're good with that. Boom. Which of the following would likely be found in the portfolio of an equity REIT? I'm going to say commercial properties. Could be in mortgages too, but I think that's an income REIT. So I'm going to go with equity REIT as commercial properties only. Boom. Okay. Which of the following tax structures, at 125 left, I think. Okay. Which of the following tax structures are typically available? Well, slow down, Ken. Which of the following tax structures are typically available to qualified plans? Pre-tax, tax-free? No. Pre-tax and fully taxable distributions? I like that one. After tax and tax-free, that would be a Roth. And after tax and fully taxable, that would be a ripoff. So I'll go with pre-tax contributions and fully taxable distributions, because that's what qualified means. Boom. Okay. An investor purchases share of stock in a Reg S. If they wish to sell the security in the U.S. markets, how long must they wait? Now, what's interesting, it's going to be a year. We know that. That's the number. If it's, I think if I remember, if it's actually reporting financials, it's only 6 months. If this was a bond, it would only be 40 days. Very biblical Noah, not Noah and Moses, right? Okay. An investor purchases 100 shares of stock at 106 on January 8th and sells the shares on January 11th a year later for $60 per share. That would be a loss of $56, whatever it is. So let's do that. So 106 minus 60, because you never do math in your head, is 46 times 100. It's $4,600 loss. So that'd be a long-term loss. And then, but sold it in 21. Could take it then, and you could lose $3,000 and get your ordinary income, and then carry forward 1,600. 16, 16, 16. Boom. Okay. It'll be a long-term loss because it's over a year. So it's got to be this one. Okay. Not that it fucking matters, a longer short-term loss, but remember, whenever you lose money, you can use $3,000 of that loss against your ordinary income, and then you can roll the rest of it over. Okay. All of the following terms typically associated with issuance of a GO bond, except firm, principal, negotiated, competitive. Okay. So for the most part, GOs are done competitive. They can be done negotiated, but for the most part, they're all going to be the competitive. Think revenues negotiated, GO is competitive is kind of the way to go. What statement regarding penalties and punishments, crime and punishment, Dostoevsky, I think is the name. I can't speak. As my kids think, they think I'm having a stroke all the time, because I'm just an idiot. What statement regarding penalties and punishments relating to FINRA rules is false? The Department of Enforcement argues for penalties against accused firms and representatives. FINRA may rule that a representative serve jail time. Second appeal is the SEC. First appeal is the National Judiciary Council. Okay, so if we do something wrong under Code of Procedure, the District Business Conduct Committee decides what we're doing. Then if we don't like it, we appeal to the National Judiciary Council. If we don't like that, we go to the SEC. And FINRA cannot put you in jail. So that's the answer. FINRA cannot put you in jail. What statement is true regarding FINRA's eligibility proceedings process? Okay. So the eligibility thing is that if you know what statutory disqualification is, right? So if you commit a couple of reasons, but the big two are convicted of a felony in the last 10 years or any securities or financial related misdemeanor or even ethical conviction in the last 10 years plus or a violation of federal securities laws, you're out for 10 years. Okay. You can actually get in earlier if you're willing to pay fees and go through the eligibility thing. So that's the whole purpose of this. Okay. So it should be B, allows a registration of a representative who is interesting. I'm going to stay sick with that one, even though that could be a little, it says in their past, but I'm going to say They're deciding whether you're eligible to register or not. I'm going to go with that one. Okay. Which of the following securities laws created by the SEC created the SEC when it was signed into law? So Active 33 is new issues. And then what I think is funny is they said, okay, if you want to do it in 1933, they said any new issue has to be registered with the SEC, which we haven't created yet. They created that in 1934. I think that's the way I always remember. And remember the acronym from it 34 is MISPERMs, margin, insiders, SEC, short sales, proxies, exchanges and broker dealers had to register with the SEC. R for reports, 10Qs, 10Ks, 8Ks for the issuers, M for manipulation, and S for stabilization. But they definitely created the SEC in the Act of 34. Ripley Inc., believe it or not, has $100 par 8.8% preferred stock outstanding. Dividend rates for new issues fall to 7.5 a year after issuance. Which of the following is the most likely current market price of the preferred stock? Now, you might not get this, but there's an easiest way. I always just do reverse engineering, right? So I do like this. I go, okay, 8.8. So I'm going to do, we know rates fell, so they know it's going to have to go up. Oh, that explains it. It has to be a premium. So we'll do 1 in case they don't make it this easy. 11.7, we're going to do 8.8 divided by 117.33. And that works out to be 7.5. And there you go. So it's going to be 117.33. The easy way to know this is if rates drop, it becomes a premium, and there's only one premium quote here. So boom. Due to a FINRA rule violation, a registered rep license is suspended for several months. What statement is true? The suspension is binding and cannot be appealed. I'm going to come back to that one. The representative may not work in any capacity for the firm during the suspension. The suspension is not publicly disclosed. It absolutely is publicly disclosed. So I'm going to say what is true is that they cannot work in any capacity for the firm during the suspension, because it's not all of them, because it is binding. It is binding, but you can appeal it. Okay. If an investor purchases what I always hate when I finish this, I think I know which ones I got wrong, and then I'm very surprised. I go, what? I get shocked. It happens to everyone. An investor purchases a newly issued muni bond at a premium. What statement is true? So remember, OIDs you must accrete. Remember, OID, original issue discount, you must accrete. And only muni premiums have to amortize. So we're going to say the premium must be amortized because muni premiums have to be amortized. Corporates and treasuries do not have to. On the discount side, OID you must accrete. Which of the following terms aligns with T bonds at issuance? Okay, so bills, notes, bonds, right? T bills are short, notes are midterm, bonds are long-term. So I'm going to say they're long-term and they pay. So the only zero coupons on the treasury side are T bills and strips, okay? Because they strip off the coupon, so there's no coupon, there's zero coupon. So notes, bonds, and tips all pay coupons. Notes are midterm, bonds are long-term, and tips are usually long-term also. So I'm going to say long-term, which is the right to. I'm going to say they pay interest. Now, in reality, it's kind of weird that they say that the way they say it, because it does pay interest just at the end. All the vendors say it that way, and it's called the non-interest interest bearing, but kind of is. You're getting interest at the end. Okay. Ooh, I fill in the blank. It's like Mad Libs. If a customer takes an IRA distribution prior to age blank, they're subject to blank. Right? That's like the old match game. If she had this, she said blank, blah, blah, blank. Okay. You've got a big blank. Okay. Only people over the age of 40 will even know what the hell I'm talking about. If a customer takes an IRA distribution prior to age 59 and a half, they're subject to withdrawal penalties, early withdrawal. If you pull out early, they get mad at you. I'm not even going to touch that one. You and your client are having a conversation about preferred stock. Yeah, like we talk about preferred stock all the time. Which of the following statements made by your client is true? Preferred stock dividends may be skipped by the BRD. Preferred stocks function best on a cumulative voting structure. There's no fucking votes. Preferred stockholders receive preemptive rights. No, they have no fucking rights. The only right they have is to get a dividend and get paid before the common. Preferred stockholders function best under statutes. There's no fucking vote. So yes, preferred stock, they can, remember, dividends are never guaranteed. So preferred are more likely to pay, but they're fixed, but there's no guarantee. An investor purchases a newly issued 6% tips at par. from the Treasury auction. CPI is reported at 4% by the time the first interest payment is due. What is the amount of the interest payment? So we know that it's paying $60 a year, but it's going to be a little bit more than that. So let's do this. So CPI is 4%. So we're going to bring up, we're going to do 1,000 times 4% equals $40. So the new par value is 1,040 times 6% is 6,240, but that's the big number. Divide that by 2. It's going to be 3,120. Because remember, they didn't say how much you get paid per year. They said how much the interest payment is, and that's going to be half a year. Boom. Okay. The OTC Markets Group and the OTCBB, by the way, the OTCBB was canceled in November of 21, are considered part of a market. So first market is exchanges. Second market is over the counter, what we're talking about. Third market is over the counter trading of listed securities. And the fourth market is institution to institution and dark pools and shit like that. So we're going to go with the second market, baby. That's my world. An investor goes short at KO at October 75, call it 350, and short is 75, put at 350. What in the market price is 74. So this is a short straddle. So short straddle, always remember with straddle, it's the max gain, max loss, very easy, is always either the premium or unlimited. So those are the only two choices, the total premium. If it's a long straddle, max gain is unlimited, max loss is the premium. If it's a short straddle, max gain is the premium, max loss is unlimited. Since this is a shorty straddle, boom, it's unlimited loss potential. Boom. Which of the following will create a tax reportable event? Stock dividends, no, because you remember, so all kind of dividends and splits, there's not taxable because you're getting more, but it's worth less, or you're getting less and it's worth more. So there's no real change in value. The cash dividends are, because even though there's technically no change in value, the IRSs are a bunch of son of a bitches that every time money touches your pocket, they tax you. So cash dividends are taxable, stock splits and dividends are not. Okay. Oh, consider the following for Denver Collective Company. 75 million authorized shares, 52.5 million issued, 1 million treasuries. So how do we figure out the outstanding? They're super outstanding. They wear tuxes and tuxedos and shit like that. Because they're outstanding. You're going to take the issued 52.5, all these numbers. Boom, 52.5 million. Then you're going to subtract the treasury. So you're going to take out the treasury. Take out the trash. 51.5, baby. There it is. So it's, do you remember Judge Ito? If you're old enough to remember the O.J. Simpson trial. That's what happens when I don't drink. I get dry mouth, right? Judge Ito, issued minus treasury equals outstanding. Boom. Customer fills out a new account form at a broker-dealer. Wait, we got a new customer with quite a bit of money. How did this person not have another brokerage account? Provides the following suitability information. 35, net worth 2.5, not bad. Annual income 600 grand, must be in finance. Investment objective, aggressive growth, risk tolerance high. The investor has 100 grand in a banking account. They want to invest in the market. What is the most suitable recommendation? This is a great question, sir. Aggressive growth. I'm going to go with a small cap because they want aggressive growth. Boom, there it is. That's the one that's aggressive. Boom, the other ones are too fucking safe. An investor goes long a CDE Gen 30 put leap, which means they're over a year, could be up to 36 to 39 months at $5. After holding the security for 15 months, the investor closes the position at a premium of 3. So they bought it at 5, sold it at 3. They lost $2, and it's over a year, so it's long-term capital loss. Boom, because they bought one, sold one. Bought it at 5, sold it at 3. These are the easiest questions in the world. It's a buy and a sell. Boom. Watch, I'm cocky. I get the runs wrong. Oh, gosh. Okay, an investor's portfolio income is 5% blue chip, 5% preferred, 70% treasuries. Wow, the person better be old. 20% short term. They want safety of principal. Ooh. This is where it's safety of principal, preservation of capital, and there is a difference. I'm going to go with safety of principal because technically preservation of capital would be more T-bills, I think. Look, I'm wrong. I always screw these up, but we'll find out together how much of an idiot I am. A registered rep resigns from their position. If I was U5, oh, I think I buried the lead. A registered rep resigns from their position in order to pursue a career in another industry. It's going to be a musician. What statement is wrong? Okay, a Form U5 is filed. That is true. So that can't be all of them. So the left two are wrong because Form U5 is filed, then all and FINRA U5 are both correct. The firm must notify FINRA within 10 days of employee's resignation. No, it's 30 days. FINRA retains jurisdiction for 2 years, fail the resignation. That's the scary part. So boom, they have to file within 30 days, promptly, but no later than 30 days. It doesn't say you have 30 days to do it. It says filed promptly, but no later than 30 days. All of the following would be considered a form of retaliation. I'm kidding. All of the following would be considered a form of retail communication. You can tell I'm getting punch drunk. As per FINRA rules, except. Now, this is why I tell people take breaks every 40 questions, right? Because we're getting into it. We've done 122 questions. I had one break, a 3-day break. It does make you feel better. But imagine, I mean, after 60 questions, I'm like punch drunk. So if you're doing a good time-wise and you're a minute or so per question, you can absolutely take a break every 40 questions just to get out of the room, get a drink of water, have a sandwich, whatever. Okay, watch a movie. Okay. All of these would be considered a form of retail communication, except, okay. Advertising, yeah, because you don't know who's seeing it. Marketing sent to 50, yeah, that's more than 25. Password protected website, that is 26 retails, that's more than 25. A newsletter mailed to 17 retail clients, boom, because that's correspondence is 25 or less, so it's not retail, boom. Navy purchases a 30-year, 12% corporate bond at 86. The bond is callable 5 years at 104. What's the call premium? Call premium. Remember, call premium is the amount above par. Call premium is the amount above par that they buy it back for. So we're going to go with $40. Boom. Robin is an affiliate of a publicly traded company and wishes to sell a significant amount of shares. There are 7.8 million shares outstanding and a 4-week trading volume is 36,000. The largest number of shares that Robin may sell are, so let's do this, okay? So 7.8 million times 0.01, which is 1%, is 78,000. So you do, it's the greater of 1% of the outstanding of the 4-week trading volume. So 78,000 is 1%. That's a hell of a lot more than 36. So I'm going to sell 78,000. Which of the following transaction types is banned for mutual fund purchases? Issuer transactions, no, you're buying it from them. Yeah, you can have a no load, no sales charge. You can have transactions with sales charge. So we're going to say margin. You can't buy mutual funds on margin. But the interesting thing is after 30 days, you can margin it. You can borrow against it. Boom. Let's see how we do. I'm a little worried. 95. Where'd I get him wrong? 12 out of 12 out of 5. Preferred stock I got wrong. Alternative pooled. Brokerage accounts and rules and ethics. Let's do this. Let's find out where I'm bad. Okay. Okay. Now I can go through each one of them, but I don't do that. So what we do is we do this. Number 4. A representative report finding evidence of an older investor subject to fraud perpetrated by a family member. What statement is not true? Okay, so let's do this. Allow and encourage. If this is okay. I'm missing this one. Okay. So what is not true? The firm may initially restrict the account for no more than 15 days. Oh, I think they're. Oh, did I fall for that? Business days. That's why I'm an idiot. The good thing is they won't do that too heavy on the test, but there you go. That's why I got that wrong. Everyone's gonna be laughing at me right away. Okay. A customer of a broker dealer with an individual account subject to probate, which document utilizes if the customer dies interstate. Dying interstate, I said without a will. If in this scenario, the probate courts appoint an estate administrator. Letters of administration are provided by the court to someone, usually a family member, who will manage the estate like an executor. Okay. Dying testate means you have a will in place and then you will do the other stuff. Okay, fair enough. Boom. We're allowed to get them wrong. Nobody's perfect, and I had a good run. 70. Did I screw that up? Preferred stock pays a dividend rate based on par. In this situation, the buys $25 par. Each pays $1.56 in dividends annually. 6 1/4. All the payments are semi. Oh, I think I know what I did. Okay. 420 annual dividends, right? And then I forgot to. I know what I did. I think I did it in half. You probably heard me do that. Okay. So instead of me saying I did how much payment would be, let's see what happens. I think that's what I did. Hope I did. I can't remember this shit. Okay. Wow. Bad run. Yeah. I told you I don't do this. You're never having to do this. Don't worry about that. Again, the ones I get mad at, I'm not going to, just in case you see it, just so you can understand it. Overriding interest, no liability for expenses. I always think it's small, but whatever. So basically, it's like if I'm a landowner and if I let you use my land, you're not going to make me pay for expenses, but I will get a piece of the revenue. Again, that's way deeper than they will do. All the vendors go way too deep on DPPs. They really do. Okay. What's going on? And then my last one's wrong. 109. Oh my God, I picked the wrong one. See what happens when you get punch drunk? I said the right thing, but I picked the wrong one. There we go. Okay. That's them. And that's makes me feel like an idiot. Because see how it feels. You're going to get some wrong. I told you, you're going to get some wrong that are going to make you feel that you think you're right. And then you got it wrong. That one I knew. I said the right thing. I should have had it. Guys, take these exams. The best way, it's too late to look at it now, but remember, you don't need a 95. You don't need a 90. You want to be passing it and understanding why you got wrong. Like the ones I got wrong, I understand why I got them wrong. Okay. Nobody's going to get a perfect score. You get once in a while, you get them, but you got to be good. If you like this program, check out Achievable. There should be a link in my video that'll help you get it. It's good. They give you a free trial. If you don't like it, you can call them, maybe get your money back, whatever, after a day or so, but they let you try it out. So you don't have to spend the money first. Really good stuff. Go check them out. They're great guys. Please check me out on Tuesday and Thursday nights live in YouTube. Capital Advantage Tutoring, 8:30 p.m. every Tuesday and Thursday. Love it. Wash your hands. Have a great day.